Greetings, members one and all of the Salivation Nation. 3 different factors that will determine just how high gold prices will go. Let's explore. Most of us have been on the edge of our seats watching gold recently. You know, gold prices have gone up substantially, but we did have a period where they went down for a while. But the prices and the movement of the prices has been quite an interesting thing to watch, considering where we are at in this unprecedented event related around the COVID-19. But really, a lot of the factors that determine the price of gold still come into play. We're going to take a look at 3 of those factors right now and how they relate to what's going on and where we're going to see gold potentially go in the near and far future. The first factor that determines gold's price is the U.S. dollar. As most of you know, the U.S. dollar is denominated and it's used to determine the price of many different commodities and aspects. It is the top dog in the world reserve currencies that are out there, the breadbasket, as denoted by the IMF. The U.S. dollar has been gaining strength as this safe haven currency because of this case. And a lot of people, typically in times of crisis, well, they sell, they liquidate all assets, including the paper gold markets as well, to go into that U.S. dollar as its safe haven currency. Usually when the U.S. dollar index moves higher, gold tends to get a little bit of a headwind. The dollar is up considerably right now, but that has been one of the key determinants of where things are going. The higher the index goes, the harder it will be for gold to rally. And that's how analysts are careful eyeing how much upside room the U.S. dollar has. And that is the case. You know, gold is not doing so well in that environment when the dollar is strong. And that is why some people are frustrated why gold hasn't gone to highs where they think it should be going. But keep in mind, we are now living in a situation where the dollar has been printed exponentially more. We are certainly into quantitative easing 4, the 4th round of quantitative easing, which is essentially what some people denote as QE to infinity. But even after QE3, the 3rd round, we really didn't stop printing money. We just dialed back the spigot, so to speak. And then we had what I refer to as quantitative easing 3.5, which is the repurchase agreements between central banks. Now, in theory, that money will be paid back or should be paid back, but you never know. I tell you, it is the fact that they're having to print all this money to be able to keep these loans going between these central banks at that time is quite a scary proposition. But now we are trillions and trillions of dollars in deficit spending in the past couple of weeks here, and that is going to hurt the dollar index, I believe, in due course. And that means a weaker dollar means higher gold prices, because gold is that one metal that will check against the other currencies of the world. It's already up at record highs in other currencies around the world. But considering the U.S. dollar is sort of the foundation of other currencies and sort of the best of the worst out there, it is the one driver that DIX, the dollar index, is what is going to determine as one factor for gold price. The next factor is safe haven demand. And we've seen that recently. A lot of demand for gold and silver, but gold especially is seen as the ultimate safe haven. You know, you've heard me talk about many times how the Bank of International Settlements during the last Basel III meeting has been referred to as a Tier 1 asset. That means that it is the ultimate in money and storage of wealth. central banks around the world stack the metal and accumulate it as a safe haven asset. And so that is why you and I, we accumulate the metal to be our own reserve bank. That's right. We can be our own central banks and have the power that these big central banks have, even if it's just a little bit of gold that we can have to preserve our wealth as an ultimate insurance policy for sure. And it is fascinating that when we have this gold in our possession, we have essentially said no to the dollar, in these times of uncertainty. Because all the dollars that we spend on gold, that is the ultimate in liquidity in my view, because gold has been money for millennia. And it's not to say that the dollars don't have a purpose or role. Obviously, they do. We use them every day for our transactions or whatever currencies you hold. But the safe haven demand that is gold is quite appealing right now. And finding gold at a decent premium is very, very difficult right now. Even with the prices as high as they are, you're still seeing higher premiums. And that is due to the demand on the product. And that's what people want. When times get tough, that's where they ultimately go to. Even through a period of either deflation or the selling of assets, especially in the paper markets for liquidity. But I think we understand that the actual demand for the physical far outweighs the paper assets or the ETFs and the like. And that is something to consider when purchasing online or through a brokerage of an ETF or futures. In my view, it's the physical that really people want when times get tough. That is what a safe haven demand is. I don't see really an electronic version of gold as being the ultimate safe haven, although it can be in times of crisis or near crisis. But we've seen it play out in this present crisis that people sell off the ETFs and or they buy the physical. And that's what you're seeing here before you. Physical gold. There's something to be said about it as an ultimate and safe haven demand. And the third factor, which I think is the most interesting, and because it does play off of emotions and psychology, and that is volatility. We've heard of the volatility index out there, and that is a measure of fear, essentially. The fear index, the misery index, and the like. All these different things come into play when it comes to, how gold is priced. And gold is one of those metals that, purchases of it can be driven by fear. I did a video recently calling gold the fear metal. And most certainly that is what it is, because when people get scared, they want to go back to that safe haven. And it is going to be quite interesting to see how this plays out and how much of a role this third factor of volatility will play into gold. If it's too much fear that goes into purchasing gold, it may turn people off from it down the road when things normalize. And because if you're basing your purchases off of pure emotion, logic and common sense can sometimes go by the wayside, and your reason for purchasing, may think, well, I'm safe now, I've got this gold, and then when the price goes back down, it is sort of an anathema to what you had been thinking before, and that it is going to stay up. And so, the best thing to do is to not let these factors drive your purchases solely and completely, especially in volatility. So we'll see how that all plays out, but the three factors that affect the price of gold or that drive gold's price in this upwards direction or downwards direction. In times of economic stability, people want to take a little bit more risk. They want to find an asset that pays dividends or a stock that pays dividends. Gold is certainly not one of those, and that is why most analysts say that you should have no more than 10-20% in your portfolio, although I've heard as high as 35% too, but I would recommend in the lower tier for most people, and only buy from what you understand. Gold is one of those metals that it has certainly captivated us for millennia, for ages and ages. It has surpassed and survived different political structures, different empires, different epochs, nations. It will continue to do so. It will outlast us all. And its beauty will shine on for as long as this world is in existence, for sure. But those three factors that are going to come into play, we'll see what happens in the coming times as to how gold survives and how it is seen. The one thing about gold that is, I think, quite fascinating is that it is inert. It doesn't react. It is, and it always has been, and doesn't tarnish. Its shine is what it is. And, you can dig a gold coin out of the ground that has been buried there for thousands of years, and it will still maintain the properties that it had at the time of its burial. It doesn't erode, it doesn't go away. And I think that is the one testimony that I believe this metal created by God is a testament to time and history of constants. The constants of time and the constants of gold. Yes, the constant of gold. And so there you have it. Gold, the three factors that will determine its price are what they are. And we will press on. I hope you enjoyed this video. Feel free to post your thoughts below about this interesting metal and these factors that determine its price and times moving forward. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.